Alternative investments like private credit more available to retail investors than ever before. It's a revolution really is taking place in finance. And Robert Frank is joining us right now to talk about the launch of CNBC's new Inside Alts newsletter, which gets into all of this. And the revolution is here now.
Yeah, Andrew, revolution is a really great way to put it, because from private equity and private credit to venture capital and hedge funds, the world of alternative investment is going mainstream. Total assets under management for alts has more than doubled over the past decade, from $7 trillion to $18 trillion today, expected to top $29 trillion by 2029. Now, once reserved for institutional investors and the ultra-wealthy, alts are now moving down the wealth ladder. Apollo Global CEO Mark Rowan told me that retail investors are the next wave.
We used to have 3 flavors of ice cream: vanilla and chocolate, stocks and bonds, and a little bit of strawberry alternatives. We're about to move to Baskin-Robbins. Gradations of each of these things. And we're moving to a place where investors are being asked to consider something new: trust, alignment. This is going to take a long time to have a shift. Good news, it's been happening. We're watching it take place in institutions. We're watching it take place in family office. I believe it's going to take place in individual investors.
Now, of course, high fees, less liquidity, less transparency, and not great returns have all been risks in the alt space recently. I asked Rowan and pressed him about the lack of transparency compared to stocks. Here's what he said.
This notion of lack of transparency just reflects an idea that's rooted in 40 years ago history. It's just not the case.
But we don't have the same level of disclosure for private companies, private borrowers, than we do for the stock market, which have to report quarterly earnings, anything that's material to the company, right?
Absolutely. But how do investors invest? Do investors buy stocks today? Or do they buy indices? Do people actually do the work? I don't think so. And so there's not that there's no information. There's just less information.
Such a smart guy. Really fascinating interview. Now, for the full interview with Mark Rowan and our continued coverage of the alts revolution, you can sign up for the Inside Alts newsletter at cnbc.com/insidealts. That's cnbc.com/insidealts.
Are you writing 2 newsletters now?
So, yes. Thankfully, this one is with the great Leslie Picker. So Leslie and I will both be doing Inside Alts, but this will be 2 newsletters. Yeah, I'm a sucker for punishment.
You go. I am impressed. That's fantastic.
Yeah, and this is sort of an offshoot because, you know, alternative investments have really been core to the portfolios of the wealthy.
Right.
So for the wealthy, this world is more important to them than what happens in the stock and bond markets. So that's why I've been spending so much time over the years covering this. And because it's becoming so important in the financial landscape for both corporate borrowers and investors, we just decided, look, let's really dig deeper into the world of alternative investing, both for investors and for corporates.
How far are we away from changing the definition of what it means to be a sophisticated investor?
Well, that's already been changing. I mean, you see Congress taking actions over the past decade that have reduced both the financial threshold as well as the educational threshold. And now there's even more movements to say, look, basically, let's just do away with that. So I think it's been watered down over time. And I think with this executive order from the White House that's saying, look, we want more alts and 401ks, that will start the process toward having more retail investors, often through partnerships, get into more alternative.
What do you make of this idea of some folks now we talked about it before, tokenizing private assets, and whether that is just a complete workaround and should be illegal, whether it is illegal? What is it?
Well, you know, you've been asking the question about should everyday investors get more access to private companies, or should private companies be more public so that we can get access to them? And Rowan said he actually thinks that rather than private companies going public to give that access, he's going the other way, where more retail investors, whether it's through tokenization or just securitizing these markets, making them more tradable, more liquid, you know, more transparent, that basically we're going to see more and more companies stay private, but more and more public investors retail investors getting access to those through funds, through trading exchanges, through tokenization.
He thinks that doesn't pose a challenge because nobody is looking at the numbers anyway. I mean, that was his answer.
That was kind of his subtext. Well, in a totally correlated indexed world where people are just buying the index, which are now dominated by 10 tech stocks, his point is that we're not doing the research. We're not really selectively picking stocks anyway. Everything's correlated. So the idea that stocks are safe, privates are risky is no longer the case.
Although privates are hard to get out of. That's the problem.
They are harder, as we've seen now with the colleges
and universities that have gotten
trying to get out of that. And so that is one of the big arguments that people make about retail investors getting into alternative.
Right. You're more likely to need your cash.
If you need your cash. Right. Now, if you're a young investor and you've got a longer time horizon, say decades, and you're not going to need your money on a Tuesday, then these are perhaps better long-term returns for you. But liquidity, especially as it's been highlighted by these endowments, is one of the big draws. A lot of family offices, they don't need liquidity, but they are furious that they have not been able to get their money out of private equity for the past 5 years.
Right. Like
how much, though, is this an effort to get into what are described as the semi-liquid public instruments for folks like an Apollo? Obviously, Blackstone's already done it, and others.
So semi-liquid public instruments like?
BREIT, obviously, is one. Obviously, there's a whole bunch of these sort of semi-liquid instruments that are sort of quasi-public.
And that's where the industry is going through these partnerships, through securitization, through starting funds. The question is, you're supposed to get higher returns in alternatives because of the illiquidity.
Yeah.
If you create these hybrids where you're getting the liquidity,
but you're not getting higher returns.
You're also not going to get higher returns
but you're
over
not really,
time.
Well, the worst is you don't get better returns.
That's right.
And
That's right. And you've got high fees. And the fees are another thing that Mark and I spend a lot of time talking about.
Sophisticated investors, that sounds like jumbo shrimp to me. And over time, a lot of times retail investors have been there for moves that I think sophisticated investors mean that they got enough money that they can lose it because they're no better. They're no better than anyone else.
Certainly. So, although if you look over a 25-year period,
are there such people that? Because we have a hard time finding them to book on this show in terms of guests.
Sophisticated investors.
Yes.
Meaning you beat the
successful
over 20
investor.
20 years at a time or longer.
Yeah.
It's like a handful.
It's more relation to what is your time
how much
horizon.
You can lose.
So the richer the investor, the longer you're investing for generations when you're a rich investor. So you can afford the illiquidity. You can afford
If you're young, if you're not qualified, you can't get into these things. So it's not just how long you can be there; it's how much. It's if you have enough dumb money to lose.
If you're young and not qualified, there are more and more. Let's say private credit. You can get into private credit now with the minimum of $10,000-$20,000. So again, through these funds.
Obviously, this is a rich, fertile ground. We love talking about it. We love that you're writing about it. And
thank you, guys. We're excited. Leslie and I are very excited.